Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Professor Young, good afternoon. Thank you for coming on today.
Happy to be here.
Well, let's start with Wall Street, where stocks were down again on fears of escalation in the war in Ukraine. The Dow is now off about 9% from its January high. What's the story in the global markets as we start a new week?
Okay, well, after a somewhat mysterious bout of optimism in the stock markets right after the Russian invasion of Ukraine, there has been lots of bad news dealing with the pandemic, inflation, and Ukraine invasion into Ukraine, which explains a lot of these lower market figures. Russian exchange traded funds fell dramatically, and some ETFs were halted for trading in the New York Stock Exchange. Stocks of Russian companies listed in United States and London have been plummeting. Stagflation fears have been rising. The United States economy is expected to slow. Europe risks recession, and Russia double-digit decline because of the Russian invasion and the sanctions. Chinese GDP growth targets the lowest growth rate in recent history at 5.5%, though the markets may pick up a little bit if China decides that it will engage in expansionary monetary and fiscal policies. And then after the markets closed in U.S. crude oil prices briefly topped $130 per barrel, which is a 13-year high, and that has been affecting the European and Asian markets today. U.S. markets have not opened yet. And then these problems, there was a Russian attack on Chernobyl, and then another Russian attack on a Ukraine nuclear power plant. There has been some concerns that if the nuclear power plant was damaged, the damage would result in a catastrophe 6 times worse than Chernobyl, though a lot of nuclear engineers seem to be discounting that claim, but still, that spooked the markets. And all of these problems have overshadowed the good U.S. job report that came out on Friday morning, and and the investors are now moving to safe haven investments such as the U.S. dollar, gold, and bonds. As you mentioned, because of all these factors, on Friday, Dow, S&P, and NASDAQ all lost value, Dow by 0.53%, S&P by 0.79%, NASDAQ by 1.66%. For the week, Dow lost 1.3%, NASDAQ by 1.3% as well, and S&P lost by 1.3%, NASDAQ by 2.8%. The futures seem to be very pessimistic as well. Right now, the Dow futures are down by more 1.09%. S&P futures are down by 1.4%. NASDAQ futures are down by 1.75%. And Europe, obviously, they will take the brunt of the harm if the situation in Ukraine worsens. Inflation will probably hit harder there as well because they get their energy and grain directly from Russia or Ukraine, and they will face a lot of refugee problems. So in the European markets, there have been rapid declines in the stock market since February 26th, and all 3 of the major European stock indices, DAX, FTSE, and CAC, lost more than 3% of their value today. And for Asia, again, the stock prices since March 1st has been downwards. Today, Nikkei lost about 2.9%, Shanghai so far by about 2.2%, and Hang Seng about 3.3% value lost.
Well, Korean stocks down sharply today as well. For many of the same reasons, it would seem. Oil prices continue to rise, which is not good for Korea. All the big names down across the board today, and one of the only bright spots was energy. Tell us about the domestic market.
Okay, well, it is obvious that because of the energy prices are likely to rise, any bright spot there may be in the stock market would be for the energy sector. But even there's some question on whether they will be able to get raw crude oil smoothly if there is a problem with the Russia and the Ukraine. It's affecting the U.S. Korean won against the U.S. dollar as well. Today, during middle of the trading day, the won broke 1,221 per dollar, and the markets have been struggling for the last couple of days, trading days. Kospi ended today down 2.3%. It ended today at 2,651.31. Year to date, they're down 11.3%. Kosdaq it was down 2.16% today. It ended at 881.54, and year to date, they're down about 15%.
Well, one name that's risen quite a bit so far this year, though not today, is HMM, the shipping giant, formerly Hyundai Merchant Marine. It had record high profits last year and was rumored to be set for privatization, but it's now reportedly looking at stopping its routes to Russia, following similar moves by shippers based in Japan and Germany. What do you see happening at HMM?
Okay, well, HMM, which used to be called Hyundai Merchant Marine, was one of the big three marine shipping companies up to the early 2000s. The reason I mentioned that is that marine shipping used to be one of the big industries for Korean exports. In fact, along with construction, it was the construction and marine and air transport were only the three service sectors where Korea consistently earned trade surpluses. But all three shippers faced overwhelming problems after the 2008 global financial crisis when the trade volume was down, but Korean shippers were stuck with high costs because instead of buying their own ships, they used to rent it, and they were all plagued with very bad management. So all three of these companies basically went into bankruptcy and into court or bank receivership. Hanjin, the Hanjin Group for Korean Air, tried to save the firm, but they failed, and it went out of business. And HMM is now the largest stockholder there is Korean Development Bank, which owns about 25% of the HMM stock. When the pandemic hit, the HMM had a lot of difficulties because, again, the global trade volume went down. But when it picked up in 2021 and the world faced the bottleneck problem in marine shipping, as the prices of marine transport skyrocketed up, so that the HMM stock started rising in late 2020, and it started from a low about 3,800 won in the beginning of 2020, and it reached a high of 46,981 at the end of May, before falling again to about 22,000 in January, then rising again 35,400 on Friday, based on, as you said, their record operating profit that they recorded. It reportedly wiped out 9 years worth of operating losses that HMM had. And because of the rising transportation prices, the stock prices of other shipping companies have been rising as well. And at least initially, along with the high operating profit news, when news went out that HMM was considering eliminating its route to Russia, it acted as a positive news for stock prices because, well, they haven't really been making a lot of money on their Russian routes. So if they cancel their Russian routes and place those ships elsewhere, they could probably make more money that way. And today, HM announced that they will stop shipping to Russia, but stock prices have not been as good today. It fell today about 4.5%. It probably shows that the investors are perhaps over-enthusiastic about HMM last week due to their high profit news. But while the bottlenecks will probably positively affect the HMM's bottom line, if there is a problem with oil, then that might actually be bad news for HMM. They might not have enough oil to deliver, or they may have some difficulty getting oil for their ships.
Right. Professor, we're going to have to leave it there for today. Thank you, as always, for sharing your insights with us. We appreciate it.
Thank you.